Welcome back to a brand new YouTube video. Today I'm going to be showing you how I use the ICT Unicorn Model. I'm going to be breaking down all the different concepts that are used in the Unicorn Model and basically doing a full trade breakdown of this trade on the screen here, so you can actually go back test the strategy yourself and hopefully be confident in using the Unicorn Model after this video. I just want to say a massive thank you as well for all the support recently. I've gone from 330 subscribers to almost 800 at the time of recording this video, which is insane, and that's been within the past 3 weeks, so we're getting crazy right now. I appreciate all the likes, all the comments. Once again, I want to ask you a quick favour: please like the video, subscribe if you haven't already. I do upload a lot of educational trading videos. Let's get straight on this video and teach you how to catch trades like this one here. So as we jump into the charts, you can see that this is actually one of the trades we caught on stream inside of my Discord, and it is basically an A+ unicorn model, one of the cleanest ones to use for an example anyway, and it was literally yesterday, so it couldn't have happened at a better time, to be honest. So let's jump into this from scratch, okay? And the first thing that I do when I jump onto the chart is identify my daily bias. Now, I don't know if you do that, but I would recommend it. Coming into the charts with an idea in mind of where you would like price to go is always going to be beneficial to you, rather than loading up your charts and not having a clue, okay? So the first thing you want to do is obviously get your bias. Now, the way that I do that normally is by looking at previous day high and previous day lows, okay? So you can see that this green checkered line here is previous day high, and this green line is previous day low. So this is Wednesday's low, and you can see we've already taken it here. So we've already swept yesterday's low, and we are continuing to push lower. So in this example, I'm going to be bullish, and that is because we've swept previous day low, so I want to see a retracement back into yesterday's range. Okay, so I would like to see price come back above this high, okay, and start trading inside of yesterday's range. Now, of course, if we'd have swept previous day high first, then I would look for short, and I would want to target inside of the range here, okay? So now that the bias is out of the way and we know we're bullish, this is going to be our external target, okay? So this is our overall target for this session. Now, I only trade New York AM session, which is an hour and a half. So from 9:30 to 11 AM, that is where I look for the Unicorn Model. So I've got my daily bias. I am in my session. Okay, so this is now where we can start identifying where to find the Unicorn setup. Now you can see that market has actually opened here. So this is the 9:30 candle, this bearish candle here, and we've just pushed straight down. So that's continuing with the overall trend of bearish because we took out previous day's low. So what we know is that all of the liquidity is above, okay? We know that above this high, and above all these other highs is liquidity. The reason there's no liquidity below for us right now, or in terms of this trading session, is because everybody is in shorts right now. All the price action, all the order flow is bearish. So we know if we can catch the reversal back up, we're going to get a big trade and it's going to take out a lot of liquidity above, okay? So with that in mind, this is where we can start looking for the model. Now, the main important thing when using this strategy is to make sure that your entries are inside of a macro. Okay, this is extremely important, and it's got to be a rule in your trading plan if you're going to use this strategy. It has to be in a macro. If you don't know what a macro is, then it's essentially the last 15 minutes and the first 15 minutes of every single hour. Okay, so you can see this macro starts from 9:45 till 10:15. The next one is 10:45 till 11:15, okay? You get the point. So price action has got to give us a unicorn inside one of these half an hour zones. Now that is very important. So as we're approaching this macro now, I already know I'm bullish and I'm looking for longs. This is where I now need to see the unicorn model present itself. If you are unfamiliar with how it looks, then it's going to be something like this, okay? So you want to see your normal price action where we're continuing in a trend. Then you want to see a pullback, okay, that breaks structure, and then there is the unicorn model, okay? So that gets the unicorn model the name from the fact that this looks like a unicorn horn, okay? It sounds stupid and it is stupid, but it's quite memorable. There's the unicorn horn, so that's the liquidity sweep, the manipulation leg, and then we get the flip, okay? So we're looking to try and take a long position from somewhere in this zone here, okay? So we're waiting for this unicorn model to play out, the flip, and then we get in, okay, with our stops below the unicorn. Now that is the general idea, and that is how it's going to look the majority of the time. So if we transfer that over now to real time, you'll see that here we enter the macro and immediately we start pulling back up. Okay, so this is good. This is what we want to see, because this is already telling us that the intention of this macro is bullish. The second we enter this macro, we start flipping bullish. So that already tells us that we might be getting a setup here, okay? If we'd have just continued flying down, I mean, the chance of us getting a unicorn that are bullish are obviously very slim. But the second we enter this macro, we do actually start pumping, so that's great. Okay, so this now tells us that buyers are stepping into the market. And what we do is we actually break structure to the upside, okay? And we do that because we get a candle close above this internal high, okay? So we've actually broken structure to the upside, which is obviously bullish, which is what we want anyway. So this is good. Now that we know we have actually broken structure to the upside, this is now where we need to start looking for that unicorn sweep to then enter a long position. And you'll see we do actually come down and start forming a higher low. Now, if you know anything about market structure, you'll know that when we get a change, okay, in the character, so this change in the state delivery, you want to get a higher low, which will then create a higher high. And that creates a higher low, that creates a higher high, okay? So this is where the market structure shifts, and we go from bearish to hopefully bullish. So here we are now putting in that lower low. I mean the higher low, sorry, not lower low. So we're putting in that higher low now, okay? Now what do we know about this low? We know that all these early buyers, okay, all these early buyers that have entered here, have got their stops back below this wick, okay? Back below this wick in this kind of zone here. Now, of course, the market needs to take out people before we enter a trade. The first step of any trading model is make sure liquidity has been swept. If it hasn't been swept, then you're going to get swept, okay? That's the rule that always sticks with me. That's the way that I learned it. If you haven't seen a sweep, or you're not entering off a sweep, then you are probably going to get swept. So once I see this low get put in, this is where I'm thinking this looks perfect to sweep the unicorn model. Okay, so we put in an internal low, which we know the stop loss is below, because we've seen the bullish momentum kick off. We've then put in a higher low. We know that there's money resting below this. Okay, what we don't want to see is price break this low. Okay, because this is our bullish structure. If price starts closing back below here and starts coming down here, the unicorn's not going to play out, because we are breaking structures to the downside. Okay, we need to see this low remain. This needs to be the lowest point of this bullish structure. So now that we've got this internal high, we've got this internal low, this is now where we wait for that unicorn model, which is the horn. Okay, we're waiting for that manipulation that sweeps out the low. And you can see straight away we get that manipulation. So we immediately wick down, sweep out this internal low without closing below it. Okay, and we remain inside this bullish structure. So this is still, you know, a higher low than this one. So we're still in bullish structure. We haven't broken this main low. As long as it stays intact, we are still bullish. So now that we've had that unicorn horn, all we need to do now is flip back up and prove to us that it was just a liquidity sweep. And as you can see, look at that reaction. That reaction is exactly what you need to see. You need to see displacement back up. And that is the flip, what you need to see every single time. Okay, so you see how we come down, we create that internal high and the internal low, we sweep it, and then immediately shoot straight back up. Okay, and this is now where we are going to enter a trade. So now that we know the unicorn model is playing out right now, this is absolutely perfect. We've got the sweep, we've got the bullish structure, and we have got our target, which is previous day low, sorry, and we want to trade back into this range. So we've got our buyer sorted. All we need now is an entry. Now, the way you're going to enter these unicorn model trades is one of two ways, okay? It's either going to be a breaker block or a fair value gap. Now, they're the only two that I use. You can use mitigation blocks, but I don't really use them myself. So I'm only going to teach you what I use and what I know. So I only ever use fair value gaps or breaker blocks for entries when using the unicorn model. If you're unfamiliar with what a breaker block is, then it's the last candle that got printed before the unicorn horn started, or before that last manipulation started. Okay, so in this example, it's this full bullish candle from the wick to the bottom wick. That is your breaker block, okay, because it's the last bullish candle before we swept. Okay, hopefully you understand that. It's pretty simple. It's actually just the last candle before we sweep, and that is now the breaker block. So what you can either do is wait for a price to tap back into this and take a long position off it, but in this example, you'll see that we do actually leave a bullish fair value gap as well. Okay, so this is now where you can take the pick. You can either wait for a better entry, but risk not getting tagged in, because price doesn't have to come back down to here. Okay, or you just take an entry off the fair value gap with a slightly bigger risk because you know you're losing out on these points, but you are going to get in the trade. Okay, so that's completely up to you, and you have to make your own judgment on that. But in this scenario now, we're just waiting for this fair value gap to get tapped into. So this is now where you can set your limit order, which will be here. So you want to buy a limit there. Your stop loss is going to be a candle back below this breaker block. So, and your take profit level is going to be back inside that previous day's range. Okay, so here I'm going to set my sell limit, and that is going to be our TP. And if I also get the long position up, you're going to see what risk to reward this is. Okay. Now, this trade here was a 4.6 risk to reward trade, which is absolutely insane. And you'll see how well it actually plays out now. Okay. So we're entering off this fair value gap. We've got the breaker, we've got the unicorn model, and we have got our bias. And we're also perfectly in the middle of this 30-minute macro, which is really important. And as you can see, price then immediately wicks us in, tags us into the trade. Our stop loss is below here. We immediately just cannon straight up, targeting the next external high, which gets swept very shortly after. The next candle. Okay, so there we sweep out the next external high. This is now where you would probably close the majority of your position, and now you're just letting the rest run to that previous candle's range. Okay, and there you can see we hit full TP with literally zero drawdown, absolute sniper entry, and that is what you're going to get a lot of the time when you execute this model correctly. Like, you're going to get perfectly wicked in, and it's just going to rip in your direction, and you're going to get those unbelievable sniper entries. And that is literally the A+ unicorn checklist. Like, this is such a good trade right here. This is textbook. If somebody asked me what is the unicorn model, this is the trade I'll show them, and that's why I made a video on it, because it's just perfect. The way we moved up, the displacements up, the speed, like, everything was just great about this trade. Hopefully you've took a lot away from this about the breaker blocks, the fair value gap entries, and also the actual signature and price that you're looking for. Okay, so you're looking for that breaker structure, and then you're looking for the unicorn model to form. So you're just looking for that little manipulation that sweeps out the early movers, and then the quick flip back up. And if you look at that displacement alone tells you we're going to go higher. Okay, so that should already give you extreme confidence. When we're printing bullish candles with that size, with no top wick, that is a bullish sign, okay? As well as all these other confluences, the sweep, the breaker block, and the fair value gap, we've got so many different PD arrays we can actually respect from here, that your stop loss should be very protected, resting below here. Like, it should be a protected low. And that is my A+ criteria for the ICT Unicorn model. I do trade this live inside of my Discord every single day. The Discord link is in the description. I've also got a full trading mentorship available. I've currently got about 50 students enrolled onto it, which I teach live every single day, and they also get one-to-one lessons. So if that is something you're interested in learning this strategy one-to-one with me, then make sure you join the Discord, drop me a DM, and I can enroll you on the mentorship. I'm just asking one quick favour once again, don't forget to like this video, subscribe to my channel. We are so close to 1,000 subscribers now, we're pushing very, very quickly towards it. So every single subscriber helps. Let's get there as fast as possible, and I will see you on the next video. Hopefully you enjoyed.